Good morning and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite is Anita Rausch. She is the head of capital markets over at WisdomTree. Thank you very much for joining us over at MarketSite. We're going to talk a little bit of ETF trading 101. And my first question to you is, what's a common question that you get with liquidity regarding ETFs?
Hi, Jill. Thank you so much for having me. Good to be here. So as the capital markets team, we're actually an educational resource and trading advisor to our clients. We help them understand how to best trade ETFs and understand the ETF structure. So one of the most common questions we get is on average daily volume, and average daily volume is hugely misunderstood. And what I always like to remind clients is that ETFs is a wrapper for an underlying set of securities. So the average daily volume of the wrapper is only telling you how many people want to buy and sell that strategy on a daily basis. So it's demand, but it's not supply. The supply actually comes from the underlying set of securities that make it up. So when you're having trouble understanding how much an ETF can trade or what its capacity is, I always advise them to either come to the capital markets team or their trading counterparties, and we can help you figure that out.
Well, does an exchange listing really matter in today's day and age? What benefits does the exchange listing bring to the ETF structure?
You know what, it's really interesting. Not many people really talk about what benefits the exchange listings bring to the structure, but they're huge. So first of all, one of the biggest benefits is the transparency of trading costs. The bid-ask spread that you see on screen is what you're paying to buy and sell this ETF. You know exactly what you're going to pay. Another part of that, though, is whatever you pay does not affect any of the other ETF shareholders. So your buying and selling doesn't affect anything else. Now, this is versus a mutual fund, though. In a mutual fund, you're getting an NAV. The portfolio manager buys and sells all day long, and all those transaction costs erode NAV for all the portfolio managers, for all the mutual fund holders on a daily basis. So the exchange listing gives you transparency of trading costs. It also gives you tax efficiency. So tax efficiency actually comes in two parts. One, the creation and redemption mechanism does give the ETF portfolio manager much more control over their tax lots. But the exchange listing part is extremely helpful in tax efficiency. So on average, now this is on average, you have to bear in mind, 10% of the average daily volume of an ETF translates into a creation and redemption, or trading within the fund. So only 10% of the average daily volume that you see on screen translates into trading inside the fund. A mutual fund trades on average 10 times more than that. So there's less opportunity to create capital gains in an ETF because of the exchange listing.
And to wrap up, does the ability to trade intraday, does that really matter if I trade very often?
Well, it's actually interesting because a lot of people come to me and say, I don't need to trade all the time. I'm trading once a year. I'm a long-term holder. I don't care about the intraday liquidity or the exchange listing, but it helps you when you need it because the exchange listing affords you the opportunity to potentially trade cheaper than cost. And actually, Phil McIntosh, Nasdaq's own new global head of research, did an incredible research study when in a previous life of his, when he was at an ETF market maker, one of the largest ones out there actually, and he said 90% of US listed ETFs with US equity underlyings trade cheaper than their cost. So what that means is 90% of the time in a US equity ETF, you're buying and selling cheaper than if you were buying and selling the strategy on your own, buying it in a mutual fund or any other over-the-counter wrapper, because only 10%, like I said, of the average daily volume translates into a creation or redemption or trading within the fund. That 90% creates cost savings. And that cost savings translates into tighter or cheaper bid-ask spread. So it does help you even if you don't want to use it.
All right, well, Anita, thank you very much for joining us at MarketSite. And thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.